This is part 3 in a series I'm doing about a theory about what a future currency reset might look like and why a reset is necessary. If you haven't yet watched parts 1 and 2, this video might not make much sense to you, so please go back and watch those first before watching this one. Here's a quick recap of the points covered in parts 1 and 2. The gold standard was in place only in name in the 20th century. In reality, credit was pyramided upon gold to enable the growth in the oil economy. Oil was capable of growing at 7% per year in the early part of the century, while gold was only able to grow by less than 2% per year. Credit was easy to extend, and so it expanded in lockstep with oil, at least until 1970. In 1970, oil production slowed dramatically, and for more than 40 years the rate of increase in the oil production was only 1.3% per year. Unfortunately, the growth in paper credit was not slowed. It maintained its unrelenting rate of increase until very recently, when the credit started increasing even more rapidly. Since 1970, credit has grown on average 9% per year. Unfortunately, people decided to use the credit as a savings vehicle. They failed to realize that although credit has expanded by a factor of 40 over the past 4 decades, the rate of oil production has merely doubled. There exist some very powerful people in the world who own a very large amount of the world's assets. These are the people who not only determine who runs for office, but they also influence political decisions after the elections. These people are very much used to their wealth and their power and would like to hold on to it. They are also aware that the credit created over decades cannot be honored, and so they will look for a way to reset the credit system without losing their wealth. Gold may be the key to the reset because it has historically been money and can assume any value necessary without adversely impacting the economy. The mechanics of how it may be reintroduced into the money system have been detailed in part 1 of this series. So according to record, there's about 100,000 billion or $100 trillion worth of paper currency and credit money. This is basically the amount of financial wealth available in the world. These represent claims on wealth. These are the assets that the financial elite will own the most of. So the question is, how much of this wealth is actually owned by the power brokers? How much do they stand to lose if the credit system crumbles and decays and is changed? So of the $100 trillion worth of credit, how much of it is owned by the truly rich and powerful of the world? Well, let's refer to a recent report put out by the UK Guardian. According to that newspaper, there is about $32 trillion being stored offshore in privacy havens. We don't know exactly who owns what, but the $32 trillion is probably a reasonably good number for what the elite actually own. Let's assume that this is the amount of financial credit that the truly powerful of the world own. They'd be more likely than anyone else to use these privacy havens. In reality, the elite probably own much more financial wealth than this, but let's use this as our estimate of the amount of the financial wealth that the elite would like to prevent from just vaporizing when the credit system resets someday. So if it's true that a gold revaluation will be the key to the financial elite protecting their wealth, we'll want to estimate how much gold they have. This would be a very difficult thing to do because physical gold is a very private thing. But we can at least get a guess at the number by estimating how much gold the elite don't own. Follow along with me and let's see where this goes. We know that the total amount of gold mined throughout history is about 5 billion ounces. This is a fairly well-established number and has been validated by several independent sources. But not all of this 5 billion is available to investors. Let's start our process of elimination. According to the World Gold Council, about 2.5 billion ounces have gone into jewelry. About 1 billion is held by world governments. About 500 million ounces have been used in industry. This leaves about 1 billion ounces for investment, and this does not include all of the gold that has been lost and is unaccounted for. This is what the power brokers of the world will potentially have access to. So let's give the rich and powerful some credit and assume that they are able to quietly acquire 100% of the investment gold available. This would leave them with 1 billion ounces as a group to cover losses resulting from their $32,000 billion worth of credit money going up in smoke. If a controlled reset were to happen, what would the value of this gold need to be to cover such a loss? It's a lot of zeros to put into a calculator, but you can do the math. You'll probably do this several times when you see what the number would need to be. It's pretty large. And remember, this is what the value of gold would need to be in purchasing power, not a nominal number. When the currency is reset, nominal values will be meaningless, at least for a while. It's the purchasing power that the power brokers of the world are interested in preserving. But again, this analysis assumes that the financial elite are able to gain control of 100% of the world's available investment gold. What if they can't? Let's assume that they can only obtain and control 50% of the investment gold available. This would be 500 million ounces to cover $32,000 billion worth of credit losses. What would the value of gold need to be adjusted to in order to cover such a loss? What would the dollar value per ounce need to be? I think you'll find it interesting to do these calculations and think about them. It's probably no coincidence that the numbers are very close to a number that legendary investor Jim Sinclair has thrown out to his readers as the ultimate target. Give it some thought. Let's discuss it.